When speaking about car insurance, it gets a little confusing on who's going to have the best company for the best price. And the weird thing is it constantly changes. So when you're talking to a friend or a family member and they're telling you they got a good deal, that may not be true anymore. And you just don't know until you start shopping around. So let's talk about what determines the rates or the prices for car insurance. The first and probably the most powerful piece that insurance takes into consideration is your driving record. Most states don't care so much about not at fault claims. So if you got hit by someone else and it wasn't your fault, 9 times out of 10, the state or the company doesn't really care about that. Now, there are some states like Texas and a few other states as well that do actually count those against your policy. Kind of like when you buy home insurance, if you have any type of a claim that raises the risk. Some companies in some states that allow this also do the same thing. Keep in mind, most states don't allow insurance companies to count not at fault claims against you in some scenarios. For example, if you're in a state that doesn't allow not at fault claims to go against you, most of the time that means for the first claim. Usually when there's 2 or more not at fault claims in states that don't count the not at fault accidents against you, they'll count the second and the first together if it's within a certain period. The second rating factor that car insurance uses to determine your cost is what you're going to use the vehicle for. Essentially, how many miles are you going to drive your car? The more you're on the road, the higher risk there is for a claim. The less you're on the road, so on and so forth. Now, this has changed a little bit over the years because not all companies count mileage anymore. The really good ones, in my opinion, at least most of them, do. So that's a factor that they still default to, is actually looking down to the part of what you use the car for and how many miles you use. The higher risk or medium risk type companies, so if you're new to insurance or if you have a ticket or accidents, a lot of times they don't even factor that in. It's usually not a consideration to where mileage even matters. And that leads right into the third piece, which is your location. Where you live and where the car is parked can be 2 different scenarios and can get a little confusing. Some states are really picky about where you live and where you insure the car, and they want proof that you live there. For example, Florida is a state where a lot of people have defrauded the insurance companies and say they live in one area over another. It happens in Michigan as well. There's different states that have different guidelines, and these insurance companies are trying to prevent fraud, which helps you keep your price down. So if you're in Detroit, in Michigan, the prices are higher. If you say you live in Grand Rapids, which is a lot less expensive, or outside skirts of that, you might get a better price, but you might have to prove that you actually live there. So the territory or the location that you keep your vehicle at can make a difference. There's obviously weird scenarios where if you have like a young driver and they're away at school and they took a car with you. There are ways to determine and tell your insurance agent that the person has the car at a different location, and that can be rated properly. And that leads into the fourth reason, which is your age. Your age plays a very large factor, and I'll just tell you the ranges that I've come up with that I've seen the biggest rate changes happen. When you're 16, the highest rate is going to come right there. When you turn 25, it'll slowly go down. So don't think that when you hit 25, you're instantly going to be $100 less per month. It's just not the case. But as you get closer to the age 50, 50 is that sweet spot. So 16 to 25, from 25 to 50, and from 50 to 75 is where you're in that perfect scenario. When you hit 75, it's just the common claims go up. It's typical when you're 75 or older, eyesight might be going a little bit worse, not that everybody's does, but it just becomes a larger risk for insurance companies, and that price starts to creep back up. The fifth way that insurance companies determine the cost of your car insurance is your gender. Whether you're male or female, most companies don't have an other category, and so eventually that will probably be coming out. I know some companies are in the works of it. The question is, what is the risk there? It has nothing to do with whether we support or don't support that gender. It's literally the risk factor. 9 times out of 10, that's all the insurance companies are looking at. We know about 90% of the time, males are more expensive than females in most states. It depends on the location. Like I said, they take a very micro look at what zip code, what location, what territory, and then they look at male versus female, what's the risk, and then what are you? Do you fit in that risk profile? Now, on the other hand, females are better drivers and they typically get the best rate, but they also tend to have more injuries in car accidents. Not necessarily because women are more fragile than men, it's that they drive smaller cars more commonly. It's just part of the facts. They have smaller vehicles, they're more prone to injuries, and so even though they do actually get a better rate, insurance companies know and they're aware that they could have more medical claims for a female versus a male. That's where a lot of people get very confused, is they think it's just one thing or the other, that it just has to be that they don't like guys more, they do like girls more. No, they actually care down to the point of what's the best scenario for that company. Not all companies rate that way, and some of those don't tend to stick around because they can't be competitive in the market when they don't know the data. And if they have to guess at it, odds are when there's what we call a black swan event where something major happens. Another example, in Texas, it snowed last year or the year before, and there was ice storms. Lots of claims, lots of accidents. They just weren't used to that type of weather. Same thing in Florida. If a major hurricane comes through, but a second one and a third one and a fourth one and a fifth one come through, they don't expect those things. And when that happens, if the insurance company hasn't determined the price or the product price of that insurance, they're going to lose their shirts. If that happens, they may or may not be able to stick around. The sixth piece that determines the price that you pay for car insurance is the type of vehicle you drive. That's actually gotten to be a lot less because most cars nowadays have all of the safety features, have a 5-star crash test rating. If they don't, then you're going to pay more. The insurance companies do know that certain vehicles have certain accessories, and if those are added, then obviously that's going to change the price. The one that has a turbo is probably going to cost you more than the one that doesn't have a turbo. Knowing that you have that extra performance can determine the risk. Also, which cars are most commonly stolen? What's the type of security system? There's a lot of micro looking at vehicles as well. Sometimes the paint jobs are anywhere from a low end, $1,000 paint job, but if you get the sparkles in them and the extra class 7, 4 coats of clear plus, all these special paint models, that could cost you $6,000, $7,000, $8,000 versus the standard $1,000 paint job. The seventh way that insurance companies determine your rate is your credit. It's actually called an insurance score because most states outlawed using credit alone. So what they do now is they mixed previous credit, they'll do a soft hit check, and then they'll also go ahead and mix in claims, tickets, violations. I've done a full video on the actual credit piece. It does play a very large factor. Credit is a big piece, or insurance score is a very big piece on determining the rate. If you want to learn more about the credit, I'm going to put a link at the end of this video where you guys can look at that more detailed. The eighth factor is the amount of coverage that you want for your vehicle and your personal liability. So if you have high limits and you want high limits, that's not a high risk. A lot of people think the more coverage you get, the more it costs. It does initially, so the first time you go for the higher limits, there's an extra cost to that. But once you're up into that tier, you've made it through that door, and you're in that pool, we call it, you're not going to pay those extra costs going forward. If you're going from that and moving downward, so let's say you're going to decrease your coverage, you're going to see a very large discount appear. That's going to also, once you renew your future policy, make a change back to a higher price because it's just temporary. So having the right limits to where you want it to be is also very important. That's where agents come into play. If you guys don't work with an agent, I strongly recommend you do that. I'll put a link below in the description if you want to find some agents that we work with, or even myself. But someone that wants full coverage versus someone that wants just the PLPD, the personal liability and property damage, doesn't really matter as much as the limits that you want. Coming to an insurance company, like we said, with the lower limit and going higher is going to cost more, and vice versa, depending on what coverage you actually need. Keep in mind that they never use race or religion. If that's ever the case, you need to file a complaint right away. Those are just pieces that insurance companies aren't allowed or should ever be allowed to use. Some of these factors are starting to change over time because a lot of cities are starting to realize sometimes in some states gender doesn't make a difference. So why should we rate that? In other places, the zip code shouldn't matter. It should be a territory. So lumped multiple zip codes. So the lower zip code or the higher risk zip code isn't paying as much or more than the better zip code. Now that is a rating, so there's a good chance that there's a higher risk there. But if you lump them together, it kind of averages out the price. Some states have lawed that you have to have territories for that in order to cover for that portion. Credit is no longer used in most insurances in most states, so now they have to use that insurance score, which is more accurate to the risk factor. Clearly, your driving record will almost always be a factor. If you are new to insurance and you just need some of the details on what coverage you should or shouldn't be taking, I'm going to have you watch my Insurance 101 where it's going to go into more in depth on those coverages. If you want to learn more about the insurance score and how powerful that is and how it can impact the price you pay, go ahead and watch my insurance score video. Hopefully this is helpful. Like, subscribe. Don't forget to comment below any questions you have. Otherwise, I'm Mark Flockhart. I'll see you soon.